Good morning, very good morning, dear boys and girls. And today we are going through another one important chapter of management accounting, that is your capital structure. This will be first we will start with what are the concepts, what is the best capital structure. So we will go through all these concept background before the capital structure. And in this capital structure chapter, we shall cover almost all problems so that you will feel independent to read, to complete your syllabus without the help of others. This is the objective of this class, to equip students with required knowledge and complete coverage. So let us start with the capital structure. Structure means it is a combination of different arrangements. What is capital structure? Structure means arrangement of various parts. If you see the structure of the building, there you will see how the room, how the all other things have been designed inside the building. That is your structure. Similarly, in case of capital structure, how the different components of capital, like your owned capital and borrowed capital, how this capital have been arranged in the business, and these long term funds are needed to finance the fixed asset, to develop the business. So capital is of two types. One is your owned capital, another one is borrowed capital. Here borrowed capital means it is a long-term borrowed capital like debenture, like term loan. So any loan of long-term nature. Owned capital, we can say equity, preference, we can say retained earnings, reserve and surplus. These are all owned capital, right? So how to arrange these different types of capital, in what proportion, how much will be equity, how much is your preference, how much is your debenture, how much is the long term loan. All these things will give you the structure of capital. Sometimes the company is all equity company, only equity capital is there, retained earnings are there, and there is no other long-term loan. Sometimes you will find it is equity and preference and retained earnings. In some companies you will see there is a mixture of owned capital and borrowed capital, like your equity, preference, retained earnings, debenture or long-term debt. There is a mixture of owned capital and borrowed capital. So this, how to design the capital, is called capital structure. This is the main thing. So let us come to the definition of a great management thinker, John Hampton. Capital structure is the combination of debt and equity that comprise firms' financing of asset. Capital and long-term loan are the source of the business. All this gives you the inflow of cash, inflow of funds, and the business purchases asset, maintain the asset so that the business will stand. That is your financing of asset. So financing of asset is a outflow of cash, outflow of fund, whereas capital is a inflow, and there must be inflow and outflow matching so that there will not be surplus or there will not be any shortage or deficiency. So let us come to, after knowing the capital, we generally a question is coming. Suppose a project requires 15 crores of capital, long-term funds. The 15 crore may be all equity. This is option 1. Out of 15 crore, 10 crore equity, 5 crore debt. Third option, 5 crore equity and 10 crore debt. Like this, there may be several options before the investor, before the businessman. We have to see which combination is the best combination for the business. And this best combination is called optimum capital structure. So optimum capital structure maximizes the company's market value. The objective is profit, but profit is a secondary objective. The first objective is wealth maximization. If there is a wealth maximization, that means if the market value of the share increases, the wealth of the investor, shareholder, owner, wealth increases. And this wealth maximization is possible by bringing in the best mixture of your equity and debt. That is, the best mixture of debt and equity can enhance your wealth or market price of share. Suppose an investor holds 1000 share of X Limited and the X Limited share was 100, it increases to 150. So 1000 into 150. So the value stands 1,50,000. He is richer by 50,000. Therefore, the value creation is the most important objective of any business. Similarly, in an optimum capital structure, the ultimate objective is value creation. Optimum capital structure is of one is your lever capital, another one is your non-lever capital. Your non-lever capital structure. Non-lever means capital only consists of equity. Lever means debt. There is no debt. Only capital consists of equity only. And leveraged capital structure means consists of debt and equity. So non-lever and lever, these are two types of capital structure. And optimum capital is the capital structure where cost of capital is minimum. A businessman has got different options. Out of different combination of debt and equity, he will see where the overall capital cost, where the overall cost of capital is minimum, and where the cost of capital is minimum, there is a chance of maximization of profit, maximization of value of business. So optimum capital is the capital structure where overall cost of capital is minimum. Similarly, the optimum capital structure is sometimes called as appropriate capital structure. we can take one example here. The total capital 10 lakh. The company has 6 lakh equity, 2 lakh debenture, 2 lakh long-term loan. So the equity capital is 2 lakh, is 6 lakh, and your debt capital is debenture and long-term loan, that is 4 lakh. Now, if we take the debt and equity ratio, debt capital to equity capital, this is 4 lakh is to 6 lakh. It comes to 2 is to 3. This is all about your optimum capital structure. Then let us come to what is capital gearing. Gearing is a particular ratio between securities and capitalization. This is called gear. Gear means a ratio between various type of security to total capitalization. When the term gearing is applied to the capital, it is called capital gearing. So let us now come to the next one. Capital gearing is a fixation of proper ratio between two or more type of securities, and how that each security behaves with the total capital. So let us come to the formula. Equity total capital is your equity capital, undistributed profit or retained profit. This is your owned capital only, and divided by fixed interest bearing securities. Here in fixed interest bearing security, we take the preference capital and debenture. Preference capital carries a fixed rate of dividend, and debenture bond carries a fixed rate of interest. And both these, preference share capital, debenture, bond, all of these carry a fixed rate of return. So capital gearing is a ratio between owned capital, that is your equity, and fixed interest bearing securities. So this ratio will tell you the risk profile, the risk factors, all these things. It can be known from the capital gearing. Let us take an example. If the amount of equity capital is 20 lakh, amount of retained profit 5 lakh, preference capital 15 lakh, debenture 10 lakh. So if we take capital gearing, equity plus undistributed profit, that comes to 20 lakh plus 5 lakh, it is 25 lakh. Preference capital and debenture both comes to 25 lakh, so 1:1 is the ratio. This ratio reveals the extent to which the trading of company dependent on equities. It also discloses the risk of investment of capital in the company. This is one of the most important factor of capital gearing. So friends, if you are writing the question, these are the questions. We shall also discuss some theoretical questions and lot of problems in the next number of classes. And if you are writing the question, I would advise you that you please give a particular example to each of the theory questions, that will especially highlight your answer and give you a very good marks. Friends, if you like the video, please subscribe and offer your comments. You can, in management accounting, you can also go through the other videos in working capital and other, like your holding company, working capital, all other things are also there. If you like the video, please subscribe and offer your comments. that will help me a lot. Thank you. We shall meet you in the next class.